All right. Good evening, everybody. Welcome. Please let me know that you hear me all right. Turn on the camera here momentarily. Just want to make sure everybody's tuned in. Feel free to chat in. There's a webinar chat that is wide open for you. Cool. So feel free to chat in where you guys are joining us from, and we will hit our official start time. Get off and rolling over here. All right. I'll turn the camera on as well. A little weird. All right, so welcome, and yeah, please do let me know where you guys are joining us from. I'm always curious. We get people from scattered literally all over the world. Actually, we are hosting this presentation in the evening, which we very rarely do, but we didn't want any distractions here. Market open has tendency to distract me a little bit. So nice, somebody's actually joining us from Hawaii, which is, we're finally hitting you at actually a decent hour. So my name is Don Kaufman. We're going to start here officially in just a moment. A few unofficial announcements. Yeah, we're going to cover quite a bit this evening. A few things right up front. Yes, this is absolutely live. People constantly ask that question. We are, obviously with markets closed, we're not going to be executing any live positions, which I often do. It's sometimes a distraction, but here we are. This is live. You can ask questions throughout the presentation. I love that. California. Awesome. But yeah, feel free to ask questions throughout the course of this. It's absolutely a live presentation. Get into it. Let's get into it. We have a pretty good number of people on here this evening as well. As I was saying, I've actually found in some of the recent sessions, I've been a little bit distracted with markets open. So we decided to host this one live in the evening. And one of the other reasons happens to be I normally reside in the U.S. Virgin Islands. I am off the island. So at this time of the year, for about 2 months, I usually hop off the island. It's not a good time to be in the islands, dodging storms out there. So I am joining you live from Paradise Valley, Arizona. If you have no idea where it is, it's basically just outside of Scottsdale, Arizona. We're live here today. Let's get into it. So welcome everybody. This is Ultima Alert, and as I said, we are going to cover a tremendous amount in the course of this presentation. This is a high probability income generator. My name is Don Kaufman, and you are watching a TheoTRADE presentation. Let's throw up a risk disclosure. We are not financial advisors nor a broker dealer. And a few quick housekeeping items as well. With that, shut the door, turn off Skype chat, whatever else is distracting you. One thing, I mean, in all seriousness, we're hosting this presentation in the evening, not only because I'm in a better time zone for that. Obviously, I'm on Pacific time in Arizona right now, but also because I have actually felt distracted in the last several presentations that I have done. So with all due respect, please take this seriously. I'm going to cover a tremendous amount and specifically hosted again this particular webcast when markets were closed to be able to focus a little bit more on the presentation and less on live markets. So with that close, Facebook permanently close it. Phones on silent mode. Definitely kick out the kids. My kids are in the main portion of the house, which is good. They're back in school. The grandkids definitely kick them out. The dog, that's about it. The dog can stay. Look, you took the time to be here. Focus on being here. As I said, I'm going to cover a tremendous amount over the next probably be about 90 minutes or so, if that's all right with everybody. I'm going to be showing you how to generate a number of returns. And here's just a few, like IWM 62% and QQQ 49% and spiders 50%. Look, I'm just throwing up numbers, right? Okay, it's a lot more than numbers. The specific trades I will detail here momentarily. With that, our gift to you, the auto expected move indicator. Stay with me. right until the end of this webcast this evening. And I will provide you, of course, a link specifically to the auto expected move indicator. For those of you that have absolutely no idea what the auto expected move indicator is, if you've seen literally any video that I've done off of YouTube, and I tend to do the evening videos, and I do those evening videos multiple times throughout the course of this week, but I reference the auto expected move indicator. And this indicator is literally, it's changed the way that we view markets. What the indicator effectively does, okay, is it handicaps forward movement in the market using options. So almost every technical indicator you use is backed data. In fact, when I'm talking about this, if you look at the chart on the screen, anybody recognize where the chart on the screen comes from? That's just a screenshot, but does anybody recognize where that chart on the screen comes from? Okay, comes from this platform, thinkorswim. And I use thinkorswim. I also use TastyTrade, and I actually kind of use them interchangeably. I do find myself now these days trading extensively more on Tasty, but I still use some of the thinkorswim technology. And one of the reasons why, which I'll explain to you in a moment, is this is heavily my background. For those of you that don't know, myself and several of the other individuals here at TheoTRADE in our prior career, okay, helped build thinkorswim. So this was our baby, specifically the charting package. And almost everything that you do in terms of technical analysis is using back data. Well, the auto expected move, I'll give you an example here in Tesla. The auto expected move, here we go. Inside of Tesla, auto expected move, you can see the market literally adhering to it. It's how the option market handicaps forward risk. It's basically based on standard deviation. There are so many uses for it, but the strategy that we're going to discuss today uses expected move, and therefore I thought it was imperative to provide you a copy of the auto expected move indicator. Again, stay with me right until the end of the webcast. We will give you a copy, okay, of the auto expected move indicator. It is a $500 value, and you'll use it incessantly in your trading. Again, this is something that I feel everyone in the markets should ultimately use. And auto expected moves help me actually find a number of these trades. And here's spiders, 60% return, another spider trade for 50% return, QQQ for 64%, QQQ for 52%, more winning trades, Qs, 50%, Qs, 51%, the TLT, which is the bond ETF, 53%, spiders, 50%. Look, I'm going to show you precisely, okay, how we get into these trades here as we go. Look, this is why you're here today. So we're going to talk extensively, okay, about Ultima trades. We're going to display to you what Ultima and Ultima trades really is about and why they are absolutely ideal for the current market environment in potentially generating monthly income, right? We're actually going to talk in just a moment here about a symbol that professionals use on a daily basis to be able to create Ultima trades. So you'll see that here in just a few seconds. We're going to actually discuss edge in quite some depth. For those of you that have never heard the term edge, I'll explain exactly what that means. When we're talking about edge, okay, something that's mathematically, okay, discernible, mathematically repeatable inside of the marketplace. It's again, it's not going to be like, you know, this is a trading setup and there's MACD and Fibonacci's and the Bollinger Band and there's red and green flashing arrows. That's not what edge is. We're actually going to show you definitively what edge happens to be. We're also going to teach you to reap the benefits of extraordinarily high probability trades and how not take large losses, okay, if we're of course wrong, and you will be wrong in this business. We're also going to find out what products are actually, you know, really produce viable candidates and what products are a recipe for disaster. When I say products, you guys will hear me use that term products. Everybody know what word products means? Okay. By the way, this is the interactive portion of the session. Don't leave me hanging here. Okay. What do products mean to you? When somebody says product, all right, we're starting off on the right foot over here. Somebody says product. What does it mean to you? It's interesting because, you know, on the professional side of trade, a lot of people, it's all they talk about is, you know, what product do you trade? What product? Look, Talk about product. Doesn't matter whether it's a stock, it's an option, it's a futures contract, it could be currencies, it could even be crypto. Okay. Products are instruments that you trade. Okay. I like it. Somebody actually put it up there, said instrument that you trade. Okay. Whatever product you trade, we're actually going to talk about products here. And again, it can be like anything. The thing is that for me, trading is completely interchangeable. Whether it's crypto, you're like, no, you have to know this from crypto. Really, you don't anymore. Okay, I mean, it's literally everything should be traded interchangeably. With the stocks, options, futures, currency markets. All right, it should be literally all on one front end trading application and be a click away. And that's a big portion of this, and we're going to talk extensively about that. Now, before we go any further, this is what you do not need. And I wanted to cover this because I always feel like I'm fighting with people down the line of this presentation. You don't need a large trading account to be able to do this. You do not need a large trading account. You have $2,000. By the way, the $2,000 limit, that's not my rule, okay? That's actually FINRA, specifically SEC regulations, which limit what you can do inside of an account. So $2,000 or more, and you can do this. You're not going to have a lot of time. Ultima is very, very hands off. Okay, we're going to show you how you can actually execute also directly off of any mobile device. So right off of a phone, trading experience is not going to be a significant amount of trading experience. I feel all the time that I'm always fighting with people like sometimes you have to unlearn some aspects of this. So we're going to go from zero to the first trade in a matter, of a few hours here. And you're not going to need a significant amount of margin. Okay, you don't need a lot of margin to be able to do this. $600 in margin is very reasonable. Okay, technical knowledge whatsoever. By the way, that's not technical analysis. You're not going to have to be a computer geek. Okay, you don't necessarily have to be isolated. Okay, in doing this, we have a really supportive community. There's no hidden fees or high commissions anymore. That's over and done with. The cost of trading is phenomenally low. Okay, and you're not going to have to take a significant amount of risk. We, really distinguish ourselves as being risk averse. I mean, we just absolutely hate, taking dramatic amounts of risk. We're going to show you how to actually mitigate, which is minimize risk on these trades. So anyway, here's a little bit about me. I know some people come to the presentation here. Okay. Some people come to the presentation, they have no idea what a TheoTRADE or a Don Kaufman happens to be. So here's a little bit of background. I'm going to give you just the nickel tour. So I start with something that I feel pretty strongly about. I watched order flow for 15 years, and it is in large part what brought me to this point to, co-found TheoTRADE was myself, okay, and several others here at TheoTRADE have a very, highly unique skill set. And the way to kind of discuss the skill set that we have, I know that there's educators in the markets that come from all walks of life. I mean, literally people write books and they're like, one day I was a teacher and the next one I decided to be in the stock market. Okay. That ain't our background, not even close. We come from predominantly the trading background. Me specifically, I grew up in this business. And when I say I grew up in this business, literally I grew up in the business. I had family in the business, grew up around it. I have no idea. People ask me all the time, when did you learn about stocks, options, futures? My entire life. I remember like Thanksgiving talking about I'm in the money, I'm out of the money. What's your delta? I mean, that's the conversations we'd have around the dinner table. I had no intention, absolutely no intention of going into the financial world. I have a degree in molecular genetics. You want fries with that? 3 weeks out of college, I ended up in Chicago, actually working for a cousin of mine. And I actually, shortly thereafter, was a risk manager for a decent sized trading firm. Okay, about 2 years after that, I was invited to a startup brokerage firm. I met some traders on the floor, the Chicago Board Options Exchange. They actually had some ties, ironically, here to Scottsdale, Arizona. So I met them not only in Chicago, I'd met them out here in Scottsdale as well. The rest is kind of history. So I was official employee number 13 of a startup firm called thinkorswim. I was on the executive team when we took that company public in 2007. At that time, it went out for just over 600 million. Eventually, we sold the firm to none other than TD Ameritrade, which is a short time after. I was also on the executive team when the company was bought by TD Ameritrade. I went on to run education not only for thinkorswim but also TD Ameritrade and their 7 million clients. In our last kind of organization, I had 768 people that reported through our organization. And the bottom line is, well, we got to see everything that you did. The depth and degree of some of the people that we have here at TheoTRADE is unrivaled anywhere else in this, pretty much in this industry. So imagine that for the better part of 15 years, when I say we, myself, Jeff Bierman, and Blake Young and Brandon Chapman, all of us actually worked in that group. And we got to see everything you did. And moreover, we actually studied it. The way that we actually built education and specifically built the thinkorswim trading platform. People look at the platform to this day. You realize thinkorswim platform now is 23 years old. People go, holy crap, the thing is still amazing for 23 years old. How did you build, such cool technology? Watching what other retail clients did. I mean, literally, okay, and the knowledge of what works best. What you're going to learn here at TheoTRADE comes from watching order flow, okay, and the knowledge of what works best specifically for retail traders. We watch billions of dollars of mistakes, okay? We're going to show you what works, what doesn't, okay? It's critical to us. With that, if you ever need to get a hold of me after today, just go support@theotrade.com. We use a common inbox, okay? So go to support@theotrade.com, put Don Kaufman in the heading. That will get directly to me. This couple of media appearances. This is TD Ameritrade TV. I still do a spot every week, at least once a week on TD Ameritrade TV. It's every Wednesday. If you're interested, it's tomorrow morning, bright and early, a spot on TD Ameritrade TV. I do CNBC from time to time. Prefer not to do so much CNBC anymore, but this is one of the more memorable moments on CNBC. They pitted me against Kevin O'Leary. Okay, it's a dog eat dog world. This is also one of the bigger pieces of media I did. This is actually IBD. For those of you that have no idea what IBD is, Investors Business Daily. This is originally the William O'Neill Company. And this, was a huge article that was actually done. And if you look very carefully right here, it was the December of 2022. They basically did an article specifically on people that did well in 2022. Of course, my quote, this has actually been the best year I've had since the financial crisis of 2008. This is actually a sample of some of the trades that IBD used to name me Trader of the Year. Bonds, 54%, ES, 53%, ES, 55%. Again, bonds, 64%, ES, 51%. Look, I'm going to show you these exact trades and a lot more like it, but let's dive into it here. By the way, people always ask me this question. One of the main portfolios that we run here on a $50,000 account did 56.6%. That was what we ultimately submitted to Investors Business Daily, IBD, for that particular article. Anyways, 56.6% is $28,314.75. Let's get down to it. Let's talk about trading here. Okay, market chaos has arrived. One thing, okay, I want you to understand. Traders, like, they always think it's about seeing the future. What's coming next? What's coming next? This strategy does not embrace that. What this strategy embraces is chaos. Okay, volatility, some chaos, and that's not going to abate soon. I'm not going to sit here and preach to you that we're going higher, we're going lower, because all of that is for nothing. And I'm serious about that, and I want people to listen to that. I'm not here to argue with anybody. I mean, look, the skin in the game is this. You don't need to know whether the S&Ps are going to 5,000, whether they're going to 4,000, whether they're going to 3,500. It doesn't matter. What you need to know, okay, is that the more chaos that there really is, the more this strategy, okay, is going to have degrees of success. So that random nature of the marketplace. Here's a couple of items that I think create that chaos. And it's, again, inflation. Is inflation really cooling right now? Okay. By the way, I'm going to throw that one up there for grabs. Inflation cooling. I put a question mark after it, and the reason I did that is, have you seen oil lately? Okay. For those of you that missed it, what happened today was it's not good. It's not good for inflation, people. Not good. So OPEC decided to, let's just cut and keep extending those cuts. Oil is straight up over here. Fed pushing rates higher. Maybe that's not happening, but they're going to continue to contract the balance sheet. Strong dollar, exports, inflation. Check this out. By the way, seriously, you want to talk about like chaos in the marketplace? Okay, wild moves higher. By the way, this is, or like the dollar's already into tomorrow. The dollar exploded higher today. Oil, okay, exploded higher again. It's brutal out there, right? And geopolitical risks continue to proliferate. What I say, game on. Okay, just embrace the chaos. Look, markets got real in 2022. It's the first year that we had to deal with interest rates. We haven't had to deal with interest rates for basically almost a decade and a half, from 2008 until roughly, let's say 2022. Rates started really coming up in 21, but in 22, it got real. It got real, and we're going to actually deal with higher rates. Stock picking Reddit boards, just not going to cut it. You're going to need a strategy that embraces chaos and volatility, doesn't rely on directional bias, reduces risk while substantiating monthly returns, right? Those are going to be key things. Embrace volatility, doesn't rely on directional bias, okay? And again, substantiate monthly returns, okay, without having to sit here and bark about what you think the markets are going to do. So what are Ultima trades? Higher implied volatility in skew has resulted in significantly more options premium. That basically makes an options price higher. Ultima trades are designed to sell options premium while reducing risk. Now, before we get into this any deeper, okay, one of the things we look at a lot is what we term skew. Skew under the symbol SKEW. Now, anybody can pull this up. Anybody can pull this up. Okay, any decent platform has got what we term skew. Skew is calculated at the end of the day, and I wanted to show you this because skew, okay, right now is, even after it backed off a little bit today, it's still considerably higher than it has been. All right, high skew coupled with higher volatility. Now, a lot of people look at something called VIX for volatility. That's a volatility index. It's not a great way, though, to ascertain what is really going on in volatility. With that, okay, Ultima trades, again, are designed to sell options premium in the midst of degrees of chaos in the markets. And the more chaos there is, the more effectively, okay, we're likely to sell, okay, forward premium. Now, for those of you that understand a little bit about options, phenomenal. I said the word. Look, something I'm always going to say about options. Options are going to be the quickest, the fastest, the safest, the easiest way to get to where you want to go in the stock market. But you do, okay, have to have just a little basis, little knowledge behind it. Now, we are going to talk about selling options right now. Many have heard through the grapevine selling options a way to make money. Some of you, again, they have no experience trading options. That's fine for today. Like, just seriously, don't freak out on me, okay? Even if you're vehemently against like selling options, okay, I want you to watch this because people miss critical aspects of how to do this, okay, with degrees of success. How many people here have actually gone out and experimented with selling options? Come on, how many? Just say me inside of the webinar chat. You can say me, yeah. Me. Okay, there's a lot of me's. Okay, here's another one. All right, somebody said absolutely none. Me. Okay, anybody here brand new, never had any? Okay, anybody here brand new? Never had any experience whatsoever to the option side of the business. Okay. Anybody say brand new? Say new. Just type in new. I'm new. Okay. Curious. Because I want to just, again, a big portion of today's session, if you whatever you've done in this business before, like I always feel like saying this is so important. I've seen it before. Okay. I spent, a couple of years in the market making side of the business. So spent years in the market making side of the business. Then I spent 15 years in the brokerage side of the business, running both education, some of the risk. Okay. And now we launched, I exited TD Ameritrade in 2015. I had a 5-year lockup clause. And after I exited TD Ameritrade, we launched TheoTRADE about a year after that. So I've now spent, the better part of about 7 years here back in the education and the unregulated world over here. Bottom line is I've seen everything. Okay, you guys are not gonna surprise me in any way, shape, or form. But it's important that we, interact a little bit in here. And I want to know if anybody's absolutely unequivocally brand new and has never traded an option before, because those that have actually sold options premium, okay, they know full well there's risk involved. This is what happens to everybody that learns to sell options. They sell options, they make money. They sell options, they make money. They sell options, they make money. And all of a sudden, they get hit by a Mack truck and they go, I don't like it. Okay, look, what we've got to get to is the selling options part. Beautiful. Getting hit by the Mack truck, not so much fun. We're going to mitigate that exposure. Okay. People get, a little nervous about selling options. The other aspect that I really want to cover before I go any further, don't worry about the margin. Oh, I feel so much better now. Look, today's session, I'm going to separate myth from real risk. Okay. Fact from fiction. If you have a $2,000 account, you're going to be able to do this. Look, don't panic. Okay. You can know nothing about options. You're going to get through this just fine. Newsflash, you can now do this in small accounts. By the way, it's $2,000 in a margin account. It's $5,000 in an IRA. You can do whatever you want now in an IRA. Most people don't know this. They changed the rules for IRAs years ago. They actually changed the rules for an IRA during COVID. And no one actually came out with like an article that said, hey, they changed all the rules for IRAs. Like you could actually sell options naked now in an IRA with no experience. And most people don't know that. Okay. And brokerage firms, some brokerage firms are going to let you do it and some are not. And I think it's interesting stuff. So again, if you're brand new to this, okay, if you're brand new to this, yeah, stay with me here. Okay. If you're experienced, you're going to grab, okay, the little kind of nuances. If you're not experienced, just big concept, probability and risk. Let's dive right into it. There's a lot of different facets of selling premium. People talk about selling option premium. Okay, selling option premium. You can call it selling premium. You can call it credit spreads, call it bull call spreads and bear call spreads and bull put spreads and bear put spreads and delta neutral trading and iron condors and selling naked. Oh my, and there's mambo combos. Okay, I can go on and reversions, conversions and reversals and boxes and jelly rolls. Selling premium can be both bullish and bearish, okay? But generally, okay, we're going to be considered market neutral today. Here's the one thing I want to tell you guys about selling options. I always feel like when people start talking about options, other educators start talking about options, okay, and they confuse the issue so much. What are options? In this business, what do you have? You got calls, okay? And you got puts. That's it. What can you do with calls and puts? Okay. Well, the last time I looked, you could be a buyer or you could be a seller. That's all that options are. When people start talking about it's an iron condor. What's an iron condor? I sold a call, I bought a call. I sold a put, I bought a put. That's an iron condor. Yay. Okay. What's a box? I sold a call, I bought a call. I sold a put. It's just all the same garbage. Like in the end, you have calls, you have puts. What can you do? You can buy them or sell them. You can even sell stuff to open, which we're going to talk about here momentarily. But I'm serious when I say, make this business easy, okay? Make it easy. Like forget about all the named strategies out there, but you don't know about a 1-3-2 strike butterfly, okay? Let me tell you guys something about this. I love to bring this up because you think about like all the crazy people, okay, that named the strategies in these things. Like, look at this, right? We used to sit around and laugh hysterically. We're like, we're going to make a 1-3-2 unbalanced butterfly. Okay. I'm going to have a 1x2 iron condor. I'm going to go deep and wide 4-month, 4-strike, double diagonal, straddle strangle swap. Okay. Look, I was in my early 20s. There was drinking involved. It was all good. But in the end, all of this is just, it's a call and a put. You can buy it or sell it. All right. And it's important that you guys know that. Like some of this stuff, okay, that was put into the thinkorswim platform, okay, quite literally, we were coming up with stuff because we realized that other brokerage firms didn't know what the hell we were talking about. And it amused us. It amused us at the times. But in the end, there's a call or put, okay? And in the end, you could buy it or sell it. With that, we're going to jump forward. We're going to jump forward. Are we having fun yet? I like this. With the market not open here, I'm actually concentrating. It's good. It's better for the ADD. Anyway, how our members are doing. I wanted to throw this in here. TheoTRADE, unique seasoned trading insights and analysis. TheoTRADE, a place with a comprehensive set of resources to study, okay, and exceptional instructors, beginning with Don Kaufman. I have a PhD in quantitative economics, okay? I've learned more about markets in the economy listening to Don K when the Fed spoke than from my graduate studies. All the instructors offer unique seasoned trading analysis and insights, and the chat with other members is exceptional. Lots of shared wisdom in there. You can go as deep as you want or stay close to the shore, and the shallow is your choice. Takes a while, okay, to make pickles, okay? Gain experience benefits from TheoTRADE, but it's worth the cost, time, and effort. My review is based on multiple years of experience with TheoTRADE. Here's just one more over there. In general, highly recommend, okay? My part, grateful to Theo. With that, let's get down to probability and profitability. Your trading is based on probability. You and we can create trades all day long with a 90% probability of success and still lose money. Remember that. And I actually like saying that, or 90% probability of success, but you can still lose money. Probability alone doesn't make you profitable. Remember that. Okay. Markets are always a series of trade-offs. There's like a give and take with trading. You could be right 90% of the time, but you could still lose money. When somebody says you can be right 90% of the time, the first thing that you should think to yourself is what? I'm serious about this. Somebody says you could be right, follow me. You could be right 90% of the time. What's the first thing that should come to your mind? I'm serious. What's the first thing that comes to your mind? All right. So if you could be right 90% of the time, okay, and somebody actually promotes that, yeah, I'm right 90% of the time. By the way, our track record's even better than that, okay? What happens the other 10%? I love it, okay? That's what you need to think about. That's what you need to think about is what happens to me the other 10% of the time. So we're actually going to talk about where to find edge first. Okay, we're going to talk about very high probability trades. We're going to talk about where to find edge, and then we're going to show you risk mitigation. Does that sound good? Okay, because that's what people are here for. Let's get down to it. Let's show you something really important. So I always use the exact same example. I like using, okay, what I call kind of like a baseline example. And the reason I like this baseline example, it's just a great starting place, right? It's a great starting place, especially for those of you that don't have experience. Look, this is the part where if you have experience, just everybody calm down, because within about 3 to 4 minutes, I'm going to hit areas that even experienced traders are going to be like, why are you doing that? Oh, that's where things are going to get very, very interesting. So here is stock, and the stock's trading at $100. Now, do I want to buy the stock? No, I'm not going to buy the stock. First of all, and there's nothing wrong. Like, I'm not going to sit here and say, categorically speaking, stock is wrong. That's ridiculous. It's not wrong, okay? But I'm trying to generate monthly returns, okay? And I don't want to substantiate tying up a huge amount of capital. Like, capital is critical, and how you use your capital, like capo, and how you use it is an entire genre of trade. So we want to most efficiently use every dime that you have, whether it's a $2,000 account or a $2 million account. And this can qualify for both sides of the spectrum over there. So we're not going to buy stock because stock's going to tie up capital, and stock could actually achieve phenomenally large losses. I don't care if it's one share or if it's hundreds of shares. Instead, we're going to trade options. In this case, we're going to look at calls. Now, what do calls do? Calls give you the right to do what? Right to buy. In this case, I'm going to go out there and I'm going to buy, okay, a 120 call. The 120 call is going to cost me exactly a $1 debit. That says debit. And this one's going to be good for 3 months. Now, time out. I just threw a lot at you there, didn't I? Okay, we're going to buy a 120 call. For those of you that are brand new to options, have no idea what an option is. First of all, you ready? Calls, they're the right to buy. Calls are the right to buy. And you can buy a call and you can sell a call. And you go, what? Yeah, if you buy a 120 call, it gives you the right to buy the stock at 120. If you sell a 120 call, it gives somebody else the right to take stock from you at 120. Before that, you're going to pay something. If you buy a call, you're going to pay something. What are you going to pay for? Paying for time, baby. Time. Time for what? Well, in this case, I'm paying for 3 months. Okay. So the first thing, what's a call? Call is the right to buy. Number 2, okay. Options are always good for time. How much time? Could be a day, could be a week, could be a month. In this case, it's going to be 3 months. I want to torture you. It's 3 months, but I'm buying a 120 call. Where's the stock currently trading? Stock's currently trading at 100. The 120 call gives him the right to buy the stock at 120. Is the stock trading at 120? No, the stock is trading at 100. So why do I want a 120 call? It's a wing and a prayer. But I paid $1 for it. So what's the most I can possibly lose? Come on, what's the most I can possibly lose? When you pay $1, what's the most you can possibly lose? In this particular case, I can't lose more than what? $1. All right. So my risk here is defined to whatever I paid. It's the premium paid. So I buy a 120 call. The 120 call gives me the right to buy the stock at 120. Do I have to buy the stock at 120? No. Do I want to buy the stock at 120? No. Then why am I buying a 120 call? Because I'm just here to make some money, man. That's it. I'm buying a 120 call because I hope the stock skyrockets. And if the stock skyrockets from 120, let's get crazy. Let's say the stock goes from 120 and shoots all the way up to 130. So the stock now has gone up $30. What's a 120 call worth when the stock's trading at 130? I'm not asking what I'm making. I don't care. I want to know what a 130 call is worth minimum with the stock trading at 130. Well, if you have the right to buy the stock at 120, could you buy the stock at 120? Yes. Could you sell the stock in the open market a second later at 130? Yes. How much would you make? Okay. You'd make $10 minus the $1 you originally paid. So you only make $9. But the point that I'm trying to make is, okay, when an option is worth $10, that's what it's worth. It's called intrinsic value. It's real value. And you go, they screwed me. They can't screw you. Because if you buy a 120 call, you could actually turn around and exercise the option and literally buy the stock at 120, sell the stock at 130, make the $10 that way. Does that make sense? Okay. By the way, what's going to happen to you most of the time when you do this trade? Okay, because this is the trade that a lot of people talk about. Oh, it's very alluring. Instead of buying stock, I can buy a call option. Okay, very alluring. Look at this. The stock has to go up 20% just to even get close. Nobody thinks about that. Okay, this is a wing and a prayer. Because most of the time the stock stays flat. If the stock stays flat, you lose $1. If the stock goes down, you lose $1. If the stock goes up to 110, you still lose $1. When do you start making money? At 120? No, you still lose $1 at 120. You need the stock at 121 just to be able to break even. Okay. Things are not looking good on that particular trade. That is a rough one. Okay. So we're going to actually take the opposing side of the trade. What's the opposing side of the trade? You know, have you ever looked at a trade? And I'm serious about this. Have you ever looked at a trade and go, oh, that is the dumbest thing I've ever done? Okay. How many people have ever looked at a trade and thought to themselves? Okay. You need to follow the rules of like opposite George. Okay. You guys have no idea what I'm talking about over there. I might be mixing a couple of Seinfeld episodes in with this entire presentation, but opposite George. If every instinct that I've ever had, okay, is wrong, then the opposite by definition must be correct. Okay. It's absolutely like comical. There's also a lot of truth to it though. So we're going to go out there and in this case, we're going to sell a 120 call. Okay. And for that, I'm going to collect a $1. Okay. Credit. And I'm going to put it down here. So we're going to sell a 120 call. The 120 call is going to be trading for exactly a $1 credit. But this option is good for 3 months at a time. Okay. Now, time out. For those of you that have never done this before, okay, have never done this before. Instead of buying an option, we're selling an option. Now, immediately, those of you that have experience, they balk at this idea. You go, you can't do that. The brokerage firm won't let me. I'm out of margin. We'll take care of all that. Okay. After 15 years in the brokerage world, I have a right to be able to say that, yeah, don't worry about margin. Don't worry about capital use because we got that covered. And you can trade anything you want. You can do this inside of an IRA as well. So relax. I'll show you how to do it. Okay, we just got to get through the example first. Relax. This is where people, they start foaming at the mouth, freaking out. How's he do that? How's he do it without tying up a bunch of margin? No problem. I can even do it with like reducing risk. But for right now, all I want you to understand is the logic of selling a 120 call. What's the logic of selling a 120 call? First of all, you're selling a 120 call. For those of you that are new and have never done this before, people go, I can't sell something I never owned. Of course you can. You're selling yourself into an obligation. Okay. You're selling yourself into an obligation. You're selling yourself into what? Well, if you buy a call, you have the right to buy the stock at 120. But if you sell the call, somebody else has the right to take stock from you at what price? 120. Do I own the stock? Anybody? Do I own the stock? Do I? Do I own stock? Okay. I do not. I do not own the stock. Owning stock would have a tremendous amount. This is actually what we term selling naked. Don't freak out on me. I just need you to understand the example. Okay. This is not the full Monty yet. Okay. All we're showing you right now is selling a call because I need you to understand how to achieve edge before we can actually understand strategy. Right. And this is about edge. When I say edge, what's edge? Something that's mathematically repeatable, something where I actually show you definitive returns. Okay. You're not going to have to be, brilliant to see this one. It's going to come right to you here in just a moment. So we're going to sell a 120 call. And selling a 120 call, it leaves us exposed with risk. I'll talk about the risk in a moment. But before I get to the risk, I want to talk about, so if you sell a 120 call, you're selling someone the right to take stock from you at 120. You don't even have any stock. Okay. But what's going to happen most often? Well, first of all, this trade's good for 3 months. Oh, painful, because you're going to have to wait 3 months to make how much? $1. But what's going to happen most of the time? Stock stays flat, you make a buck. Stock goes anywhere down, you make a buck. Even if the stock goes up, you're probably going to make a buck. If the stock gets right to 118, you're going to wet yourself. You're still going to make a buck. Okay. Only if the stock gets above what? 120? No, at 120, you still make the buck, right? If the stock shoots all the way up to 130, you're a loser. But more than likely, you can see this thing coming a mile away. The stock has to go up 20% just for you to be able to do what? Well, you break even still with a 20% up move. You can see that thing coming from a mile away. But if the trade went massively against you and the stock went all the way to 130, you could lose $10 in this trade. Okay. But from a probability point of view, don't worry about, the losses are real. Okay. And I do want you to focus on losses. But for right now, I want you to think about one thing and one thing only. Is that a high probability trade? Is it a high probability trade? Anybody? Just Y for yes, N for no. High probability, yes. Okay, high probability, no. What is it? Is it a high probability trade? Okay. And moreover, what do you think the probability associated with it is? Anybody? Okay. Anybody have an idea? What do you think the probability associated with this trade happens to be? Okay. Somebody actually got it pretty much smack on. That's good. It is between a 90 and 95%. Okay. This trade, if I did nothing and I put that trade on 100 plus times, that would have a 90% chance of making 1 penny or more. But that does not signify that you're going to make money. Remember, probability alone doesn't make you money. I'm actually going to show you where money is made in here in a moment. Okay. But that trade has over a 90% probability to go. How do you know that? Okay. No, all you have to do is go and look at probability analysis, any trading application, which I'm going to show you. Okay. Before I do that, let's blank the slate. Okay. Let's blank the slate. Why did I sell options so far out in time? Okay. You may have noticed in my example, okay, I don't read from too many PowerPoints, but this one's critical. You may have noticed in my example, I sold options way out in time, 3 months out. Typically, traders sell short-dated options. Okay. Everybody right now in the industry is talking about what we term zero DTE. Zero DTE at 0 days to expiration. Oh, I should do that. You should not do that. That's why you're actually tuning into this webcast. Okay. We're going to talk specifically about criteria. We're going to talk about what are the right options to sell. How far out in time do I go? Criteria. And I'm telling you this stuff, and I'm emphatic about it because we don't just want to put you into a trade that's going to make a couple of bucks. We want to put you in a trade that's going to make money repeatedly. We want to put you in a trade that's going to make money consistently, okay? And that's also going to have very nominal amounts of risk. Now, a lot of people have seen this decay graph. How many people have seen a decay graph like that before? You can say me. This is the interactive portion of the session, okay? If you looked at this decay graph and you think to yourself, yeah, no, that makes sense, right? Why is he selling an option that's 3 months out in time? What if everything you knew about decay was all wrong? Because what's being taught to you about decay does not have to do, okay, with high probability options. Everybody has pretty much seen the decay graph, seriously, okay? What I'm about to show you, Oh, this is going to be very, very eye-opening. Okay. So we're going to take this logic that I just gave you. We're going to sell a way of the money option, and we're going to do it 3 months out. And we're going to find out if I can make some money on it. All right. I'm going to find out if I can make some money on it. So I'm going to come in here. This is the thinkorswim platform. Now I could use the thinkorswim platform. I just closed up the left sidebar, or I could use tasty. Okay. And I'm going to use in my first example, spiders. Remember when I started off today, I was telling you about like 50% returns in spiders and 63% return in the QQQ. Did you guys notice I traded a lot of spiders, a lot of QQQ, a little bit of TLT? Okay. That was basically it. Like I didn't trade like a whole lot of different things. The reason is, okay, I am very much product agnostic. Like I think that the spiders, okay, are a great product. Why? Why do I think the spiders? They traded 6 million contracts today. Can I ask you something? Did anything else in this industry trade 6 million contracts today? Don't worry about it. The answer is no. It's a trick question. The answer is no. Nothing even got close to it. Like if you look at the QQQ, okay, the Qs, that's the Nasdaq. What did the Nasdaq trade today? Oh, but still my heart. They were almost at 3 million. What else? The mother of all products, the SPX. What was that good for? Was it good for close to 2 million today? Okay. Oh, he hits it right on. It's like I've done this before. So the SPX though, but the SPX is 10 times the size of the spiders. The point that I'm trying to make is, okay, why not just pick the most prolific product out there, which is spiders? Everybody trades them. I'm going to go exactly 100 days out. You with me? I'm going to 100 days out, and I'm going to find me an option trading right around $1 because I want my fictitious example to mirror a real example. And I think that that's critical. Okay. I know the market's closed, but the spiders also, okay. I mean, these are some of the most liquid markets in the world. Perfect. Done. Let's go to the 490s. Look, okay. Here's my first example. You ready? I'm going to write it up right up here. I'm going to go out and I'm going to sell. This is a 15th of December. And this is the 490 call. And the 490 call, I'm going to middle it and say, I'm going to sell it for $1.05, which there's no question. I could hit that market right now. I could sell that thing for $1.05. Okay, what have I done? Let's say that right now the market was open. I went out and I sold a DC15. You're like, seriously, man, you're like 101 days out. You're killing me, Smalls. So, and I am, I'm 101 days out. And I sell this option for $1.05. Now what I do? What do I do now that I sold it? I do nothing. Everybody's doing something. I'm doing nothing. Okay. I'm going to tell you exactly what I'm going to do. I'm going to show you, okay, what is called Ultima. When I started off, okay, this presentation, I said, you're going to learn about Ultima. Ultima is not some like geek term for ultimate. Like I've had so many emails like that, and it really starts to get to me. Okay, where people are like, it's the ultimate trade. Ultima is not ultimate. Ultima is the volatility of the volatility of the volatility. It goes Vega, okay, and then you have Vama, and then you have Ultima. The way that this trade is profitable, okay, is there is a spectacular rate of decay of that option. Okay. Time out. What did I just say? An option that's 101 days out, you with me, has a spectacular rate of decay. Okay. Question is, do you believe it? Do you believe that? Anybody? Yes, no, maybe so. Okay. Y for yes, N for no. I'm curious. Okay. Because I'm going to show you. By the way, I'm going to define spectacular here momentarily because this is the edge that most traders are missing. All right. Like what somebody said. Okay. At least people are honest. There's an okay in there. I was like, Y for yes, N for no. I had an okay. I had an unknown. Okay. They're like, I don't know. I started drinking a few minutes ago and it made it more exciting listening to you, but that's okay. That's okay. All right. It's 5 o'clock somewhere. It is 5:50, 5:50. Anyway, I think we only have one person that's joining us from Hawaii. It's a little earlier there, but it's Hawaii. It's okay. Okay. Anyway. Let me show you exactly what we're going to do. Here's a 101-day option. Okay. If you want to know what a 101-day option is worth, okay? Right now, you want to know what it's worth like a month from now? Look at an option a month into the future. So time out. I'm going to look at the 490 call right here in the December expiration. It's trading for $1.05. Then I'm going to fast forward. How do I fast forward? I'm going to open up the 73-day options. Why am I opening the 73-day options now? Bear with me. All factors being held equal. What we're talking about first and foremost is decay. What's decay? It's the rapid rate, okay? And that's what we're looking for here. We're going to look for a rapid rate of option decay in the first 30 days, okay, of me having sold this option. So if I can sell an option 101 days out, and look how far out of the money the option is. Like, I'm in the nosebleed seats, people, okay? I'm all the way out here at the 490s. The market's at 450, basically, 449. Like, you realize that a 40-point rally in the S&Ps, okay, is huge by huge. It's huge by huge. I am only going to hold this position, okay, for approximately 30 days. That's it. I'm going to hold this position for 30 days. What's the 490 call going to be worth? Again, when I say all factors being held equal, let's not worry about market direction right now, because people go, but what if the market goes up and what if the market goes down? If the market goes down and I sell a call, it's going to make money like that. But take all directional bias out of the equation. We'll show you how to do that as well. Okay. I'm going to close this. I'm going to open a 73-day option. By the way, from 101 days to 73 days, I'm fast forwarding, but by how many days? How many days am I fast forwarding out of this? Anybody? Okay, what is that? It's 28 days. So it's 28 days, okay? 28 days, and we're gonna go look right at the 490s. Exactly 28 days from now, I'm gonna buy back, okay, those DC calls. So it's still the 15th of December, okay? And it's still the 490 calls. And I'm gonna buy them back for roughly a 40-cent debit. How much do I make in here? 65 cents after commissions and everything, okay? It's over a 60% return in 28 days. How come you're not doing that right now? For an option that's so far out of the money, it's in the nosebleed seats. The first time people see it, they go, holy crap, how could I be missing this? That's what Ultima is, okay? Why do you think there's such size out here? There's huge size now trading these back month options. And the reason there's such huge size is some of the professionals have actually figured out Ultima, that crap works. Okay. And all of a sudden you got these Reddit boards talking about like short duration options. There couldn't be anything with higher risk. Okay. Short duration options, high risk. By the way, don't worry about the margin, because I already had that question like 5 times over there. We will show you how to circumnavigate. Okay. We will show you how to circumnavigate the margin requirement in there. That's critical, you know. And again, all I want you to do and understand over here, okay, is 60%. But here's the kicker to it, because some people will be like, I could do better in the short duration. Okay. No, you can't, because you're taking extraordinary, what we term gamma risk. And even more importantly, if you're selling short duration options, you're taking negative gamma risk, which is you're basically going to blow up your account. It's not an if and or but. And I can actually show people mathematically why this works and short duration options will not. There's no if and or but about that, right? If you take a look 101 days out, okay, you can actually replicate this. So you can replicate this all day long. You go out to the 490s here, okay, and that can produce over a 60% return inside of 28 days. But there's no huge risk here. I'm what, $40, $50 away from the underlying. The underlying could race towards me. Okay, I got all the time in the world. We haven't even talked about risk mitigation. And I don't want you to think that that's the whole strategy. There's much more, okay, to this. We're not just going to go out and sell a call, okay? But then you ask yourself, well, what's the key to the strategy? The key to the strategy then is what? Okay, once you actually learn this, right? And again, you're starting to see like, why do I sell options so far out in time? Because this is what's effective. This is what works, okay? If you can actually do this, what's the key? To make it repeatable, you got to do this again and again and again and again. You got to churn through as much inventory as possible. You got to also mitigate margin. Okay. You got to knock down your margin. You can do this with a $2,000 account. I have a $5,000 account where I'm selling premium in it. Okay. Again, there's no if and or a but about it. Everybody can do this. Everybody can be able to do this. And I will actually show you exactly, okay, how to mitigate some of the exposure, how to actually knock down that margin risk here momentarily. First, I have to make sure everybody's on the same page. If you can do it once, can you do it again? Of course. This has been, okay, really good since pretty much the onset of COVID. Since the onset of COVID, all right, we had huge changes in what we term skew. And some people caught it and some people haven't. We've been talking about Ultima, okay, since the end of 2020. Goldman Sachs has written papers about it, right? There's white papers in the industry about this, but people, they don't, like, even after reading the paper, it doesn't tell you like how to take advantage of it. That's what we're showing here, okay, in detail. And again, the most important thing to us here at TheoTRADE, okay, isn't, anything but your success. That's it, okay? It's how to take a retail trader like yourself. So I'm retail, okay? Retail is not a dirty word. I'm not a market maker anymore, okay? Not on the brokerage side of the business anymore. I'm just like you. How to take retail traders, okay, and turn them into successful traders. That's job number one, okay? Here at TheoTRADE has marketing agreements with all the major brokerage firms, okay? The brokerage firms literally beg us for their clients, like for our clientele. Why? Because our clientele make money. It's one of the most critical aspects. We work with the Chicago Mercantile Exchange, which CME actually comes on TheoTRADE and discusses, okay, trades like this with us. They'll be on like 2 weeks from now. Okay, we do like a monthly, seminar literally with the Chicago Mercantile Exchange explaining trades like this. Why? Because it's risk, okay, averse, and it works repeatedly, and people have seen it now, okay? Third year of actually talking about Ultima. And a lot of people go like, man, you guys do the same strategy. I saw something like 2 years ago from you doing the same strategy. And no kidding, crap works. What do you do when crap works? You keep doing it, right? And that's such a critical aspect of this. Now, I'm gonna show you another one, okay? And then I'll show you how to mitigate some of the risk in here, right? So let's go over to a product like the QQQ. Let's go to the Qs. Okay, so we're going to go to the QQQ. Why? I'm going to do the exact same thing in the Qs. I just want to show you you're not limited to just the spiders, right? Go to something like the Qs. And in the QQQ, here, this is the closest thing to the dollar, right? So let's say I sell these 430s. We're going to sell the, apologize there. Let's sell the 430 call, okay? And let's collect, let's call it $1.25. I think I can collect more than $1.25. I'm not actually going to make it $1.25. And again, this is the D15 expiration. We're going to sell. Again, that's the 430s. Okay. Now, fast forward exactly 28 days. Just do 28 days. Okay. Does it work in the Qs? Does it work in the QQQ? Let's look at the 430s, 430s, 430s. Yes, winner, winner, chicken dinner. So we can actually go back out. Okay, and we can then buy that option for approximately, let's just hit the marketplace, 48 cents. This thing should be able to produce, okay, in 28 days, should be producing between 50, 60 kind of percent returns. There's a few examples though, the Qs, oh, the skew in the Qs right now is gold, Jerry, it's gold. Okay, it's spectacular. Okay, that again is literally, all right, in 28 days. That's in 28 days, you can actually have that kind of return for taking nominal amounts of risk. And look at the 430s. We're trading at 378, okay? 430, look at the chart for a second. Have we even hit 430? Wait, I got to open up like a 3-year chart. No, I got to open up a 5-year chart. Oh, no, okay? Have we ever hit that level? Oh, no, we have not, okay? You got to get all the way up here at the 430 level, all right, to really take a hit. We'll show you again how to mitigate some of the exposure in there. Again, when we ask the question, why do we sell options so far out in time? Okay, because theta decay is not everything. We here at TheoTRADE are not going after theta decay. We're actually going after Ultima. And Ultima is actually a flux in what we term skew. People want to know how you make money. Okay, now the key to this is this. It's the pen. If you had this pen, okay, I can sell this pen all day long on the internet, let's say for $1. I can turn around and buy these pens in bulk, 50 cents. If you can do that, then what's the key to the business? Key to the business is do as many as you possibly can, right? The key is going to be volume. The key is going to be volume. We want to churn through as much inventory as possible. If you were out there in the pen business and you were selling pens, okay, and you literally were going through like, thousands of pens, before you know it, you got to hire people, you got to have insurance. Okay, there's going to be a cost of doing business. In this business, okay, there's going to be a very, very minimal cost. And that's exactly what we're going to discuss in here. There's going to be some transaction costs, but people got to learn how to hedge. Going to learn how to hedge. The 90% probability and the 10% hammer. The one thing that I want to implore you to understand is that the trades that we're doing, in fact, I'm going to go back to my original spider example because I think it's such a critical example. And in my original spider example, we're talking about high probability trades. And by the way, you can see there's positions in my account. That's what the POS stands for, right? But here's that original example. What was the probability in here? Watch when we go to probability out of the money. That trade has a 91.72% probability of expiring out of the money. You realize I'm not going to hold the trade though for 101 days. I'm only going to hold this trade for approximately 30 days. Okay, which implies that the probability in here is even higher. Okay, but we have to be careful because what happens to people when they sell options? What happens to people when they sell options? They make money, make money, make money, make money. Damn, get hit by a truck. And I'll tell you exactly what happens. Okay, some of you have gone out. Listen to me for a second. Some of you have gone out and you've actually learned strategies like iron condors. Anybody know the iron condor? Okay, you could say me, 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 me. Some of you have actually learned the iron condor. If you don't know an iron condor, okay, you don't know iron condor? All right. If you know an iron condor, the iron condor basically does this. Here, let's see if I can draw it up here really quick. Here's an iron condor, okay? You sell a call, you buy a call, okay? You sell a put, and then you buy a put. Then you just sit there and you pray, okay, that my pen works over here. No, you sit here and you pray, like, I gotta fix that. Oh, okay. You sit here and you pray that you sit right in the middle of it. So you sell a call, sell a put, then you buy hedges and you go, oh, I hope. Okay. And you go, if it lands right there, you're like, winner, winner, chicken dinner. Okay. And the first time you do the trade, it works. And the first time anybody ever does this trade, they do it super small and they usually trade something in the spider. So the first time through, check, it worked. The second time you do the trade, you go, oh, I did one contract for the first time. Second trade is up. It worked. But the second time you did a little bit more. The first time you did one contract. The second time you actually did 5 contracts. On the third trade, you actually learn that there's a product called the SPX. Anybody ever heard of the SPX? That's where traders go to die. Anyway, in the SPX, you go and you learn to do a 1 lot. Okay. By the way, I'm very familiar with the SPX. That's where we traded. So in the SPX, you go in there on the third time and you go, yay! Okay, by the way, the SPX is exactly 10 times, they're 10 times the size of the spiders. So a 1 lot in the SPX is the equivalency of a 10 lot inside of the spiders. But on the fourth time, by the way, you've made money 3 months in a row. You're beautiful, right? On the fourth time, you go into this product called the SPX because now you're like squawking your feathers, and you do a 10 lot in the SPX, and the market goes, we got one. And the second that you do like the 10 lot in the SPX, the market just moves brutally to the downside or the upside for that matter. It doesn't matter. It wipes out the previous 3 trades. It wipes out 50% of your entire brokerage account. You go, what happened? Okay. And then usually you're talking to somebody like me on an email, and like, how did this happen? This is not even like, it's a trade, all right, but there's no edge in this trade these days. There's no edge. Like where's the edge in the trade? And you go, because you're what? Selling options here and selling options here. Just selling options doesn't necessarily make money, people. Okay. You're going to have to learn how to do this and do this right. By the way, if that example that I just did on the iron condor resonated with anybody, you probably think to yourself, it's like this guy can see my account. I could for 15 years. I used to look right in people's accounts and be like, what is he doing? They're like, watching people's accounts from behind the screen, okay, it's like the worst thing. It's like watching a bad B-rated horror movie. You're like, lady, Don't go in there. There's an ex-murderer in there. Oh, she went in there. Off with her head. And it happens again and again and again and again. You get to the point where you're like, I could just see the losses coming. So I got to the point at thinkorswim and TD Ameritrade. I'm not joking. I wanted to run the education side of the business because for a while I sat on the risk committee. I sat on the risk committee for 12 years at both thinkorswim and TD Ameritrade. And I got to the point where I was like, hey, if we just go out and tell people all the stupid things that they're going to do before they do them, you think it would fix it. Doesn't. They still do the stupid things, even after hearing it. It's absolutely horrible. Okay. I'm trying to right the world. So you pay $500 and you go to this class on an iron condor, right? Okay. And you get hammered. And then you're like, yeah, but I was making money. Anybody ever thought that to themselves? After they take a big loss, they're like, but I still remember I made money those 3 times until the 4th time you got your head cut off. And then you go, I can fix it. I know I can fix it. That is the true terminology of a degenerate in this business. I'm a total cynic when people try to fix bad trades. By the way, fixing a bad trade, just get out a shovel. Okay, you're going to end up burying yourself because anytime you're fixing a trade, it's more good capital thrown into a losing trade. It's racking up more transaction costs. Okay, you're going down if somebody teaches you to fix. And by the way, I was talking about this a couple of weeks ago to a client, and he goes, "I'm not fixing a trade, sir. I am morphing it." I go, "It's an amalgamation of crap." It doesn't matter what you want to call it. Semantics is semantics. Anything you do against a losing trade is still throwing more good money, okay, down a very bad hole. You actually got to learn how to do this right. Look, if you took a car and you drove it off of a cliff and you brought that car to a body shop, they would laugh at you. They would be like, what am I supposed to do with this? It's a piece of junk. It's total. It's done. Move on, okay? You got to learn to do this right, okay? And the key to doing this right, and we're going to show you how to sell options. Okay, and we're going to show you the full spectrum. Before I do that, again, what's the key here? We got to get to volume, like this pen. As I was saying, okay, you want to think of yourself in this business as an inventory manager. Okay, and I use the pen as an example. And the reason I use this pen as the example is because I always think to myself, I'm like, how can I do more without substantiating more risk? Okay, I got to churn through as much volume as I possibly can, because if I can sell an option and make over 50% in 30 days, and the key is sell as many options as I possibly can for the account size, right? Without substantiating too much risk, and keep churning through inventory. Because if I can sell this pen for $1, but I know that I can buy that pen, isn't that cool? It like disappears in there. Okay, green screen. Anyway, if I can sell this pen for $1 and I can turn around and I can buy the pen for 50 cents, then the whole key to making money on the pen is inventory. Does that make sense to everybody? Okay. Who here wants to learn to mitigate all that margin risk? Anybody want to actually learn to lower their margin before I go any further? If you want to learn to lower your margin, it's really easy. Okay. When it comes to margin, this is a tasty trade. Okay, and I want you to type in a product called /MES. Okay, now MES, you're like, what is an MES? Okay, it's an MES mess. Okay, no, it's /MES. It's the micro options on futures. Why would I use a micro option on future? First of all, okay, one thing that you should know in this business is that SPY. Okay, hold on, SPY. Okay, my pen keeps changing over here. SPY, ES, MES, and SPX. They're all basically the same thing. These are all S&P 500 products. So what does it matter which you trade? See, the spider is what we term a FINRA product. Bad monkey, FINRA product ties up margin. SPX is a FINRA registered product. Bad monkey. These products, there's no FINRA and there's no SEC. What is there? There's the NFA, which stands for National Futures Association, and CFTC, which is Commodities and Futures Trading Commission. Okay. By the way, I've held every license imaginable and then some. If you trade these products, the margin is Nominal. What's nominal margin? First of all, let me actually go into proper account over here. Nominal margin is this. If I went out and an MES is exactly like the spiders, you go, I don't know, no MES. Okay. If I went out and actually traded in the MES, by the way, the MES is actually open like 23 hours a day too. It's pretty cool. So if I went out and traded the MES, hey, check this out. Okay. Here's an option that I'm ready to sell. I have it. It's keyed up right now. I could sell a Dees 49.50. It's going to tie up $633 a margin. He scores. I got a better one for you because people have no idea how to get around margin requirements. And I got to tell you, there's no day trading margin rule here either. There's no day trading margin rule. You go, wait, what? How could there be no day trading margin rule? That's a firm rule. No, that's a FINRA, an SEC rule. Okay. You want to see something even more fun? Did you know you could sell a call end to put, okay? And it doesn't really tie up any more margin. So instead of selling on one side of the market, I can sell on both sides of the market now. I can collect twice the premium, $30.75, and tie up $674 in margin. Hey, I'll show you how to even lower the more. So don't tell me with a $2,000 account you can't do anything, because this, okay, is a $30.75 credit. It's that easy. All right. What do we have to learn to make this more effective for each and every one of us? Okay, that's exactly what I'm going to show you right now. So the first thing, okay, is simply this. We're going to go out there, okay, and we're going to sell some option premium. Now, a moment ago, I was just showing you in the MES. So I give you examples in the spiders, and I'm going to tell you why I give you examples in the spiders, because it's easy to ascertain. People understand the spiders. They've never heard predominantly of an MES, right? But you know what's cool about like talking about these options is that when you start to learn, okay, what you're doing and so forth, you realize these puts, okay, are trading for almost double the calls. So puts are trading for like $2, right? So let's go in here and let's talk a little bit about it. All right. So right now, where are the spiders trading? And again, to reiterate, I just had them up on the screen a second ago. If you guys missed it, basically trading at 450. Okay. So we're going to go out and we're going to see SPY right here. And SPY is trading at 450, right? Clean that up. SPY is trading at exactly 450. We're going to go out and we're going to sell, in this case, a 490 call. And for that, we're going to collect $1. Simultaneously, we're going to sell, okay, let's make it a 390 put. That's going to be trading for $2. Okay, so stop right there. So I'm selling a call and I'm selling a put. Now, what's the fear? Fear is a big move. We're going to get there. But let's say the market rallies a couple weeks later. I'll probably turn around and also sell. I don't know. We'll make this a 500 call, collect another $1. Okay, and then we're probably going to be out there. We're going to sell, I don't know, like a 400 put, collect another $2. Before you know it, the market sells back off. I might be selling like 380 puts, okay, collect $2, okay, make this one sell a 510 call, collect another $1. Now, that is what we term your inventory, okay, inventory. When I bring up inventory, you see this right now, okay, you're like, that looks like a lot. It's not. I'm just in the pen business, okay? I'm just selling pens that are way out of the money, way out of the money. You want to see what inventory really looks like? Come over to thinkorswim. Let's go over here to the monitor tab, open up. Okay. Now I know that this is written on, but you can see, all right, forget about everything down below over here. Forget about it. Okay. Forget about it. This is inventory. Look, I got 1, okay, 2, 3, 4, 5, 6 pieces of inventory on right there. And that's in the ES. Okay. If you wanted to, you could even see my inventory over here on Tasty. Let's go actually to an account that has some inventory in it. Okay, this is 1, 2, 3, 4, 5. There's 6 pieces of inventory here too. Okay, looks a lot like what I just drew right there. So what is that? That's inventory. What's the risk in here? Okay, what's the risk in here? It's a phenomenal amount of risk. this would have a phenomenal amount of risk, because what happens if the market rallied huge or sold off huge? I could get crushed to the upside. I could get crushed to the downside. Like, this would be horrendous. How do you hold these positions? Anybody? Okay. How do I hold positions like this? I go out, okay, and I put on, all right, positions like this. And then I say, enter the hedges. So what is absolutely essential on here as I say this, okay, with all seriousness, enter the hedges. There are predominantly three, okay, as I'm saying three, I'm writing three. There are predominantly three style of hedges I use. One can be an RTS, okay? RTS stands for risk twist. Two would be a VIX volatility spread. I'm actually going to show you that one. This is a VIX vol spread. Number three is called a gamma iron, okay, which I'll also display a little bit to you. What are these hedges? Okay, it's a necessary evil. If you were in the pen business, okay, and you were actually churning through a lot of pens, before you know it, in any business, you're going to have costs associated with the business. Hedges, okay, is an absolute necessity. It's a cost of doing business. If you don't like hedging, okay, you can't be in business. If you want to sell pens, okay, you're going to have some type of a hedge in the pen business. You go, what's a hedge? Well, you have an employee, don't you? Okay, even if you're the employee, do you buy yourself like insurance? Eventually, okay, there's going to be some cost of doing business, even in the pen business. You know, in the pen business, well, somebody's got to ship all these pens. It's going to be the cost of doing business. The only point I'm trying to make is hedging, people, it's not going to be expensive, but hedging is an essential necessity. Without it, you have nothing. You have nothing. It's not that these trades are not going to produce money. They are going to produce money. But what happens if all of a sudden the spiders one day are trading at 450, they're trading at 450 like right now, and all of a sudden, bam, you wake up and they're not trading at 450 anymore. They're down, 5, 6, 7% overnight. All of a sudden you're like, throwing up all over the place. How are you going to handle the risk? And the truth is, you're not. This is what happens to people. Okay. Enter the hedges. One of them I'm going to show you that I think is the easiest to comprehend is the VIX volatility spread. What's VIX? Okay. I'm not a big advocate of VIX. I'm really not. But for a hedge, I'm a big advocate of VIX. The VIX is the S&P 500 volatility index. It's the S&P 500 volatility index, right? And with VIX, the way it works is this. If the market goes down, and I'm not talking just lightly down isn't going to do anything over here. But I'm talking if the market goes just down, huge, okay, what happens? The VIX goes boom and explodes, okay? But lo and behold, we're just going to put a very, very small trade over here called a VIX vol spread. We're going to put a VIX vol spread and we're going to lay that thing right there. That is a ticking time bomb, because if the market comes ripping down, what's this trade going to do? It's going to explode in value and provide an umbrella for the other trades. Okay. The VIX vol spread, okay, it's a definitive hedge. It's like a parachute opening up. Meanwhile, how can I hedge the upsides? What they call a gamma iron. Market explodes to the upside, it'll actually catch the iron condor. These are a negligible cost. But I wanted to show people right from the get-go, this is what premium selling really looks like. Okay, this is what it looks like. And when you look at it in a real account, which I'm about to show you, okay, want to see what a hedge is? There's a hedge right there. It's 24 days left in the hedge. That hedge is an absolute necessity to hedge off the remainder of the inventory here. Okay. All right. It's kind of a different hedge in there, but that hedge is there and it's a big boy hedge. Right. And it's been spectacular. And all we do is sell some premium, mitigate risk, sell some premium, mitigate risk, do a little dance, make a little love, get down tonight. Okay. This business, it ain't that hard. And what do? You just keep repeating the exact same thing again and again and again and again. And again, I've got it in multiple accounts. Why do I have it in multiple accounts? Because I'll do this in the MES, which is the smalls. You can follow these trades, right? These trades are literally this, what I'm showing you right now is what we call the TheoTRADE small portfolio. When we trade this account, it texts everything out to you, okay? When? In real time. When I trade, text is fired. That's in this account on the smalls. This you can do with as little as $2,000, okay? This other account here on thinkorswim, this is the big boy one. This is a $50,000 account. You can see I am tying up $25,000 of margin over here, okay? This is the account you got to have 50 grand, okay? This other one over here, this is little. This one's little. Okay, by the way, the margin is actually showing for all the different trades in this account. So I do apologize. Oh, and that's an IRA. Just to show you, this is an IRA, which the IRA ties up even more margin. It's still only $4,500, and that includes trades on Google, Microsoft, and XLK. So I just wanted to show you how nominal the margin is, because everybody's like complaint is, what if, what about, and then margin, okay? There's no excuse, okay? Anybody can do this. Look, this is why you want to be able to sell premium. You can now do this in a small account, even under $5,000, produces positive theta, may enhance existing positions, provides a high probability of success. You never need to buy or sell the stock. You don't have to buy or sell stock. In fact, the products that we trade, like the MES and the ES, there's no stock. There is no stock. They're option products. You could be wrong on market direction, still produce profitable trades. I didn't even get to that. Literally didn't even get to that. You're like, well, there's a lot going on the screen over here. Okay, wind back for a second. You realize if we go up, all of these make money, right? If we go down, all of these make money. You're like, where do I want us to go? Go everywhere. Go big or go home. I'm hedged. What do I care? Just keep it rocking. The more movement, the better it is. I started this whole thing off today with like chaos. Chaos reigns. Chaos should reign. I'm going to tell you right now, you're going to need this in your life because you're going to find out really quick. Okay. Whatever you might think about the market, don't worry. AI is going to save us all. Okay. Or kill all of us. But either way, it's going to create market chaos. Look, selling premium could potentially bring in consistent returns while minimizing your risk. You want to learn how to do this, okay, the right way. We're going to discuss in a moment criteria. We're going to discuss the nuts and bolts behind it, okay? Before I get there, though, I'm going to show you live trading examples. What I mean by live trading examples, okay, we keep portfolios of all of this, meaning that when I say a portfolio, here's a portfolio. I actually show you, okay, this is a portfolio. This is an opening position, okay? These are opening positions, and then the closed positions are down below, right? So we have to open, to open, to open, to close, to close, to close. What I am going to show you, okay, are my trades. My trades, okay, and I call them trading examples. My trades and variations of all of the following trades can be done with as little as $2,000 in a funded account. And you could do this inside of a retirement account. Okay. The point being is the trades, as I call them examples, they're not examples. These are live premium selling trade alerts. These are trades that have been executed and have been sent out. Okay. Meaning that the trades, I'm starting all the way back in the beginning of 2021. And the reason I do that, I want to provide you, okay, an ample track record of success, okay, around Ultima. I start with a Tesla trade. And by the way, the reason I'm starting with a Tesla trade is, okay, simply put, it's just easier for people to interpret, okay? Tesla, okay, which is a very formidable product. Tesla, all the way back on January 8th of 2021, okay? I sold to open a 1260 call. Just a few days later, literally bought back the 1260 call for a 58% return, okay? And I just wanted you to see like what this is. And you're like, to open, to close. Tesla, okay, the exact expiration date. Where does this information come from? Okay, that information comes directly from here, okay, on thinkorswim. So if you look at spiders here, I'll make a quick point. Okay, you're going to see a lot of trades in the ES. You see this portfolio, it's a lot of ES trades. Look, this is my account statement. Okay, I'm going to go back 360 days. Everything in this account from this particular product, which is 90 fills. Look, 90 orders, 90 fills on the ES in the last 360 days. You with me? Let's open it all up. What I am emphatic about here at TheoTRADE, we are completely no holds barred. We will show you Every single trade we do, you're profitable, losses, everything. I can't stand the crap where people show you after the fact, like, I made money, I made money. You get to see everything. You get to see a portfolio every single day in real time. You get to see P&L. You're like, you're down $737. It's after hours. They already cleared the board. Okay. That really isn't very accurate, but today was kind of a negligible day. Like not much happened today. Nevertheless, okay, you get to see every single transaction. This is like to open to close, to open to open, to close to close, to close to close to close. If you looked at this, okay, you'll find this difficult to follow. So what I did is I just took the trades and copied them literally, okay, and paired them up from thinkorswim to open to close. For instance, bond short put. Here's the opening transaction, the closing transaction, okay? That was like a whole one-day trade. It must have been a wild move. 57% return. Okay, bond short put, 53% return. You go, you trade bonds? Sure, why not? Honestly, the bonds have got crazy last year, okay, which actually backed me off. All in the last 360 days, I've only had 19 fills in bonds. Some of them very, very recent, like very recent. You can see this is actually a considerable number of bond trades, okay? Again, completely no holds barred. I'll show you everything that we do here. Anyway, bond short put, 53% return. IWM short call, 62%. All I'm doing is taking you trade after trade. You guys ready? Go a little faster now, because I'm going to take you through 18 months of trades. Then I'm going to show you the live portfolio. So here's 18 months of trades, 62% return, 53% return, 76% return, 60% return, 50% return, 51%, 57%, 49%, 50%, trading a lot of spiders. QQQ, 62%, QQQ, 53%, 50%, 50%, 64%, 53%, 57%, 56%, back to IWM, 54%, a 19% loss. It happens. Okay, 54%, 52%, 49%, 47%, 49%. Okay, now as I'm scrolling through here, okay, and I'm only up to literally March of 2021, as I'm scrolling through these trades, once you have a handle on some of these products, and again, I'm just scrolling through, we will up the ante in what you're capable of trading. Okay, the more you're able to ascertain in terms of risk, okay, we can step you up. Everybody here, I don't care whether you have a $2,000 account or a $2 million account, everybody should start small, okay? And what we do is we work you from what's termed the Theo Theta small portfolio into the ES, which is a large portfolio. The ES is 5 times the size of the spiders. So we literally go from spider, like selling a spider put is like playing T-ball. Okay, then we trade the ES. So in the ES, you're not in T-ball anymore. Okay, that's big leagues and they start throwing fastballs at you. Basically, it's the same trade, people. I don't care whether you trade spiders or ES. It's the same exact thing. Okay, you're like, it's not the same. It looks different. Yeah, this is 5 times the size. So if you look, now I'm trading ES short call, 51%, 51%. Okay, ES 51%, 50%, 51%, 56%. And again, okay, 53%. Once you have a pretty good handle for this, bond short call, 50%, 58%, 54%. Okay, once again, then we can step up the strategy. This is what we call a Christmas tree. Christmas tree actually is this big ratio spread. Okay, sold it for almost a $21 credit, bought it back for a $3.12 debit, to 85% return. It's huge by huge. Okay, QQQ, TLT, and again, I'm still in 2021, and I'll start to scroll through a couple of these, and you're just seeing trade after trade. There's another Christmas tree trade for 92% return, 52% return. Okay. It's almost like, again, it's mind-numbing going through all these trades, obviously. Here's a Christmas tree with a $3,953 profit in 1 unit, okay? The credit was $13.68. I had to buy it back in 2 different chunks, but the credit on buying it back, look how huge it is. This is a trade, okay, that when you're looking at it in terms of percentages, okay, this is a trade that you can actually hit, 1,000%, type trades on. This is the ES, 53% return, 50%, okay, 55%. We're actually crossing into 2022. Okay, 57%, 55%, 51%, okay, 50%, 51%. Another Christmas tree trade for $1,000 profit per 1 unit, 50% return, 62% return, 52% return, 50% return. Okay, we are now up to approximately 18 months of results. You go, what do you do after 18 months? Well, first of all, after 18 months, I really got sick of copy and pasting this. Okay, after 18 months, what we do is we just show you the portfolio itself. This is the TheoTheta small portfolio. Okay, we can also actually, if you'd like to see the TheoTheta large portfolio, literally we let you see every single trade that we've done. Okay, everything opened, everything closed. I don't want you guys to think that there's just like this, inordinate number of trades in here. We don't have to trade a lot to make money. Okay, you just have to be very, very consistent. In this TheoTheta small portfolio, okay, we just go out, sell some premium, get back, reduce risk. The hedges, everything are explained in here, okay, in intricate detail. Look, if you don't have a lot of time, this is not going to be, as I said, hardcore hands-on. If you saw what I did in the ES, and I want to bring that one back up for a second. Okay, in the ES, I did 90 trades in the last 360 days. That doesn't necessarily quantify as exactly a year, okay? But I did 90 trades, okay, in 360, that's calendar days, not trading days. So it's not like all that hands-on. Everything we're talking about, this was displayed live at TheoTRADE. Trade results we are texting these things out. And we even have, for those of you interested, we have a mobile application, because not everybody necessarily get text. We do text and we do push notification. Selling premium is extremely hands-off. It uses literally set and forget order types. When we send out the trade, okay, we actually send out the trade. You're supposed to know specifically the buyback point, meaning like, when should I buy this back? You can actually use what we term GTC orders. For those of you that are not familiar with that terminology, what does GTC stand for? Set and forget. Okay, set and forget. GTC means good till canceled orders to be able to buy back, okay, at specific prices. A fraction of your time is enough to see solid results, because we're now providing real-time trade alerts. Someone may have actually listened to TheoTRADE or popped into one of these presentations years ago. And the biggest single differentiating factor right now at TheoTRADE, we realize, okay, we're in full-blown volatility. Like we realize we're in volatility right now. And in the midst of volatility, there's no screwing around. We send you text alerts. Okay, if I trade, there's no reason what I trade. So I do trade. You get to follow the trades. Okay, verbatim. You can trade alongside us. We actually built technology that the second I actually execute, boom, fires out a text message. It's that easy. We provide real-time trade alerts. What better time? Maybe you don't have time to necessarily learn a new skill set. That's fine. Okay, follow the real-time trade alerts. Selling premium is a wonderful hedge for recessionary times. Okay, and you know what? I throw that in there and I say recessionary times. Okay, I'm a believer higher rates are not going to be good for the economy. Markets, okay, the one thing is the markets are going to be in a bout of volatility for years to come. That's, if there's one truth to this entire market, that isn't going away anytime soon. It's just not going away anytime soon. Look what our members are saying. If you're serious about trading, okay, TheoTRADE is by far the best resource out there. If you can't make dollars, okay, you're not paying attention. They even have a hands-off approach to trading, okay, as well. If you really don't want to learn to trade on your own, their instructor's the best in the business. It comes from June 13th, 2023 from Mike Smith on a review there, okay? Look, the attributes are undeniable. You don't buy or sell the stock, okay? Risk is tailored to your comfort level. We don't use stop orders. There's no need for a stop order because we have a definitive hedge. You can vary timeframes, which will actually minimize your risk. The probability of profitability is incredibly high, and it's a perfect strategy if you want, okay? You can actually enhance your stock portfolio, okay, via selling some premium. And that's actually one of the more important things in here that, okay, I'm not asking anybody, like no one has to come in here and turn around and say like, hey, I don't want to get rid of my stocks. You don't have to get rid of your stocks. And learn to sell premium against, okay, those existing positions. So literally you can learn to sell premium, okay, against those existing positions and new products, which is MES and ES, allow for the sale of options in nearly any account size. So I stress to you, look, people, okay, build a portfolio of options. Do not let the options portion of this intimidate you. I know that there's some people new to options, people a little scared of selling options. We're not doing anything naked. We are using definitive hedges. Let the alerts do the work for you, because the alerts are going to include how much do I hedge? How much should I hedge? How big should the account be? Selling premium can be initially done for very minimal credits and very minimal risk. You can do it in an IRA. Look, you can sell Ultima Premium, okay, and minimize risk. If you have limited experience trading options, okay, don't worry about it. We can walk you through that. In fact, here, I'll even show this to you right now, all right? This is TheoTRADE. This is a start here menu. You know why we have a start here menu? You don't know anything about options. Options 101, okay? Options 201, options 301. These are little bite-sized chunks for you to be able to actually ramp up. I know it looks like a lot of videos are like, but still my heart, it looks like a lot of videos. It's not. Those are just little bite-sized chunks to get you, okay, to where you need to be, because you're going to need these strategies for the foreseeable market future. We can show you how to do this, okay, when to sell premium. It's a matter of a couple of hours. But more importantly, we are now doing real-time alerts. And again, it's one of the biggest differentiating factors of what we've done here at TheoTRADE over the last couple of years. This is what you're going to need to know to successfully sell Ultima Premium for a living. You got to know what underlying stocks or indices make the best Ultima Premium selling candidates. I've showed you some of that. You got to know what volatility you should seek out. Too much volatility, you're dead. Too little volatility, you're dead. What options expiration do I select? What I mean by that is, what options expiration? Okay. Have you looked at how many option expirations there are? Okay. Even in looking at like the spiders, pretty wild task, right? There's 1 day, 2 day, 3 day, 6 day. There's option expirations now every single day. You can see exactly where I've got positions: 115 days out, 101 days out, 73 days out. Why those expirations? We dial that in for you. Okay. What should be the delta of the option you sell? Yeah, we dial in delta for you. What option should I buy? That's the hedge. How do I build the position? How many options can I sell versus how many hedges do I need? Like, how much VIX do I need versus how much ES do I sell? Do I need a large amount of capital in my account to do this? No, absolutely not. What's the right amount of risk? We can tailor that, okay? What are the percentage returns supposed to be? Well, I can tell you one thing, 50% looks pretty good, okay? It's also obviously what we shoot for, but you also have to be concerned about those hedges and overpaying for them, right? How do I protect myself from market crashes when selling options? Let me show you exactly what we do here at TheoTRADE. TheoTRADE creates recipes in trading. Very, very detailed recipes, step 1, step 2, step 3, and then we take it a step further. We created highly detailed recipes for how to execute into Ultima. Like literally step 1, step 2, step 3, step 4, you can follow step-by-step recipe how to build an Ultima trade. But in addition to it, we also provide a real-time alert. When the opportunity arises, okay, and we are going to execute a trade, we send it out to everybody at the exact same time. Look, you're going to find out that trading, it's all about answering the what ifs. What might be a good stock or ETF candidate for you to sell premium in? What's the correct options expiration cycle to sell options in? How much capital do I commit to generating premium? If I have a $10,000 account, what goes in? Okay. What strike options do I sell? What strike options do I buy? How can I limit my risk as the hedges? We have the answers. That's what we do here at TheoTRADE. We build recipes with definitive criteria. We literally build checklists for each strategy and each unique variable that you're going to encounter. Like if you hopped into the cockpit of a 737, nobody hops into a cockpit, even the most experienced pilots, and go, let's go, throttle up, get out back there. Okay, they do that, but sit down back there now. Okay, they go through these detailed checklists and execute to be able to obviously take off. And then once they're in flight, what can happen? The market can go up, the market can go down, volatility can change. You may have to use a hedge. Okay, this is what we do with criteria. Our criteria isn't just pre-flight. Okay, the criteria is every variable. What if expiration is coming? What if there's a dividend payable? What if there's an exercise or assignment, which can't even exist on some of the products that we're trading? We take you through every step and every variable. And now we go a step beyond. Okay. We take you to Ultima trade alerts. TheoTRADE is the answer to your questions. We give you the right probability to trade. We give you how many option contracts for the account size. We give you when do you close the premium sale? What if the stock sells off big? Do I bail out of the trade? What if we rally massively? Can I fix a losing position? It becomes how, when, why, at what price. And I'm telling you right now, people, this is just the beginning of the variables that you're going to face when selling Ultima options for a living. Look, you can read at what selling Ultima premium is. Okay, everybody can read about selling options. You can Google right now, seriously, you can Google sell options premium. 10,000 pages are going to show up. Okay, maybe some of you have even built a few trades before. Okay, you might know how to build some trades. What you do not have, okay, and what you're here for is not to learn to sell premium. Okay, you're here because of alerts. You're here because of trading experience. You're here because of criteria. 20 plus years of trading experience. Okay, that's just me. By the way, I'm officially now at 25 years of trading experience, access to client order flow for over 15 years. We have viewed, okay, and studied millions of trading accounts. And when I say we, okay, here at TheoTRADE, this is not a one-trick pony, okay? We have 8 full-time instructors now, each having a minimum of 15 years of experience, okay, within the business. We had access to client order flow, viewed and studied millions of accounts. We even ran, okay, the education firm of the biggest brokerage firm with the largest option order flow in the industry for over 15 years. People, that is where these alerts come from, okay? Ultima Trade Alerts is your recipe for success. The following strategy in the corresponding criteria requires the utmost attention to detail. We spent years fine-tuning this. I mean, literally years. The trade setup, the criteria, okay, and now real-time alerts at the convenience of your mobile device. Ultima Income Generator Alerts. I am the portfolio manager, okay, for Ultima. We have Ultima alerts for $5,000 account size and a $50,000 account size. Now, real quick, you can do this with as little as $2,000 in here, okay? I often suggest that 5,000 is where you want to start. Can you do it with 2,000? Yes. Is it limited? A bit, because then you're playing like I can do one position and kind of got to wait for that one to clear out before I can do another position. That's fine. Okay. The trade alerts for 3 months. Okay. That includes text. Okay. And push notification. When I say push notification, I want to be very, very clear about this. TheoTRADE, we have our own mobile application. Can you see it? Okay. I know it's cutting in and out of the green screen. That's actually a full mobile application. And TheoTRADE Mobile will actually do push notification. Okay. We do alerts in the United States. We do alerts up in Canada, but you could be over in Singapore. Boom, no problem. Okay. We'll do push notification for you. This, okay, is $297 for 3 months. By the way, that is not an introductory price. In addition to it, okay, you still receive everything else that TheoTRADE does. Okay, now give me just a few minutes to explain. When I say everything else that TheoTRADE does, you're coming to TheoTRADE to sell premium for Ultima. Okay, TheoTRADE also offers an incredibly, okay, comprehensive array of classes. Everything from day trading. Okay, so if you're a day trader, you trade some Nasdaq futures, you trade S&P futures, spiders, you name it. We have a chat room that broadcasts 6.5 hours a day. You get access to that. Okay, and I want to throw this out here before anybody they tune out immediately. Okay, they tune out immediately. Look, it's $297 for 3 months, and it's not an introductory price, and that's not a membership. What happens after 3 months? Pay another $297 if you want to do it. Okay, it's theotrade.com/SKU. Now, okay, I'm going to show you a bit about TheoTRADE, and then I'm going to explain more about the alerts. Okay, but TheoTRADE is incredibly comprehensive. This is a chat room. Obviously, it's off air. Okay, if you're taking a look in here, there are thousands of clientele. Okay, we host approximately just shy of 6,000 clientele presently on the TheoTRADE platform. So this is TheoTRADE. Okay, we have everything from like a start here menu. Where do I start? When I talked about comprehensive classes and education, you get access to the archives. What's the archive? You go to the class archive. Let me click on it. Okay, the class archive. All right. This is everything that we've done since we started TheoTRADE. Just to give you an example, options. I am the resident option geek here. We have Catapult, Flyby, and Z-Spreads. Okay, inflection point strategy, income accelerator, Ultima. Okay, but you can also watch classes on controlling your risk, volatility crash course, black book spreads, straddle class. Okay, selling options for a living. All right, how to collect income being short, in-out spreads, a 2018 edition. We haven't even scraped the surface of everything we offer. Okay, to show you what a class really looks like, let me show you Catapult, because Catapult is actually based on Ultima. Okay, Catapult. All right, the Catapult sessions. Each one of these incredibly detailed criteria. Okay, PowerPoint that you can actually download, look through all of it. All right, we even do a comprehensive Q&A session following each of these. And when I say, it's comprehensive, I think it's almost an understatement. If you look at something like the inflection point spread class, this is probably one of the most prolific classes we ever put together. Okay, it literally starts off just like now. All right, good morning, everybody. Welcome. I am Don Kaufman. You are watching Inflection Point. You can see some of the class in here. Okay, the details of the criteria, market tanks, hits the inflection point. Every nuance, okay, of everything is actually covered within here. Okay. In addition to all of the educational resources, we give you access to every class that we've done since 2016. Okay, day trading classes, technical analysis classes, option classes. People, listen, you could go out and easily spend $50,000 on a stock market education. It will pale in comparison to what we do here at TheoTRADE for $297. You go, how's that possible? How's that plausible? Okay. You should see the roster that we have here. We have Jeff Bierman. He's also a professor of finance at DePaul University. Jeff Bierman, okay, for those of you that do not know this, he built the thinkorswim charts. He is directly responsible, okay, for over 2/3 of the studies done on the thinkorswim charts. All right. We have Brandon Chapman, fundamentals, technicals. We have Blake Young, okay. It goes on and on. Our roster here is extraordinarily deep. Again, you can go out and spend 50 grand on stock market education, 297, and we include Ultima alerts. In addition to this, there's a full money back guarantee. I will specifically detail, okay, just that. I will also answer any of the questions that people have here in a moment. Again, you can go to theotrade.com/skew. Let me bring you over to that page really quickly, okay, to theotrade.com/skew. In fact, I'm even going to pop that up here for a second. theotrade.com/skew. Skew, it's S as in Sam, K as in kick, E as in echo, W. theotrade.com/skew. The reason I'm bringing you there, okay, in addition to all of this, okay, we have a class, actually, brand new class coming up. When is it? September 19th, okay, 10 a.m. 10 a.m., okay, and that's 10 a.m. Pacific, unlocking edge in your trading day with Don Kaufman, Corey Rosenblum. I'm actually doing a joint class with Corey Rosenblum on a Tuesday, September 19th. Okay, it's just part of it. Now, again, you can feel free to come in here, click add to cart. Okay, and clicking add to cart, I want to be very clear about this. Make sure to put your phone number in there. That will automatically enroll you for text messaging. Okay, you can do 297, 149, 3 payments of 100. Again, I'm going to display to you in a moment. There's a full money back guarantee on it. Okay, and there's no stipulations to the money back guarantee, which again I will get to here momentarily. And it's one of the most critical aspects, okay, of what we kind of do here. I want to make sure I just closed a page here, and I want to make sure that you guys see that page. But it's theotrade.com. Again, theotrade.com/skew. Now, before I forget about it, Ultima income generated alerts. Okay, I'm actually the live trader for the Ultima portfolios because it's what I do. It's a positive theta portfolio. Okay, no holds barred. every position, full disclosure on all trades, opening, closing, hedging positions. Okay, you get to see it all. I'll even show you what the text messages look like. You get to just watch us discuss positions like we've never done before. In addition to that, we even record a video. I record a video, okay, on a Friday morning, updating you on every, okay, move that we've made throughout the course, okay, of the week. So if like I go out and I sell some premium, you know, on a Monday, and you're like, oh, I missed that one, and I wonder what he was thinking when he was doing it. Okay, no problem. We update you on a Friday. Okay, and that video is no more than 12 minutes. So we do this for the TheoTheta large portfolio, okay, and a TheoTheta small portfolio. Small portfolio is including as little as $2,000, okay? The large portfolio, 50 grand and above. Now, what does it cost? The same. It's 297 bucks for the alerts, okay? In addition to the alerts, okay, this is our newest, okay, addition. We're giving you a full-blown mentorship with Brandon Chapman. Brandon Chapman, industry expert, vast experience in Ultima trades. He's going to guide you through the world of Ultima trading. It's full 6-week mastermind. The next one starts Monday, September 25th. The point that I wanted to make over here, we tested this out kind of on a whim, okay, a few months back. We said like, hey, you know, maybe we should go out and give a mentorship to people that are brand new. And it's, again, it's still $297. Okay, these mentorships, okay, we were initially charging. I just want to show you, we were initially charging for the mentorships. It's $1,000 for the mentorship. Okay, we are including that mentorship. Okay, today we're including the mentorship today. You enroll today, you get a full mentorship for 6 weeks. Okay, it's a really supportive community. Okay, skill building, you're going to learn, all right, from the get-go, how to execute into Ultima. And Brandon is actually going to take you through your first trade. So not only is he actually going to talk to you for 6 weeks, he's going to execute. He's actually going to execute on there. Okay, so we're going to focus on building skills, confidence, turning you into a more proficient Ultima trader. Okay, you're going to have the opportunity to ask as many questions as you want. That's one other thing here. We provide full email support. Everything you want to know, you can email us at any point in time, whether it's Brandon, myself. I answer emails. The mastermind is 6 weeks. The next one starts. And those masterminds are not recorded, they're live. Okay. They're live. Okay. And it starts September 25th. Now, if you can't make it live, you can watch the recording and email Brandon or myself thereafter. But Monday, September 25th, okay, kicks off the first series again of this 6-week mastermind. Now, in addition to it, TheoTRADE is a riskless trade, okay? Money back guarantee. And again, I want to make this as clear as possible. If you're not satisfied anytime in the 90 days, look, okay, you're only signing up for 90 days. At any point, you go through the mastermind, you get some trades. If it's not for you, it's fine, okay? Money back guarantee stipulations, there are none. There's no stipulations to the money back guarantee. The one thing I want people to understand here, okay, first of all, it's $297. At any point, if you're not happy, it's $297. Just give you your money back, okay? I like to make it very clear. We want people here at TheoTRADE that want to be here. Like, no, you know, if and or but about it. If you're not happy for any reason, there's no excuses, no questions, no commentary needed, just email us. Just go to support@theotrade.com. You're like, I'm out of the contest. It's $297, okay? We'll refund you. We want people that want to be here. We don't do memberships. This does not auto renew or auto bill. We don't do that. We don't do it because we know people do not like it. So after 3 months, if you want to continue with TheoTRADE, it's $297. Okay, we grandfather you into the $297. Okay, this is how we built just shy of about 6,000 people, okay, on the TheoTRADE platform. And we built, okay, the entire company on the notion we don't push anybody, want to make sure that you have a money back guarantee, okay? And it's about degrees of profitability here. It's like the most important thing to us, right, is to make you a consistent and successful trader. It's also one of the reasons we work with all the major broker dealers out there. Okay, you name it, they work with us. We're even like, how many education firms, okay, have partnerships with exchanges? Again, we have an agreement now with the Chicago Mercantile Exchange, where they actually come on and help educate our clientele here at TheoTRADE. It's great. It's $297 is the full money back guarantee on here. Okay, onward and upward. I'm going to answer some questions. Ultima alert. Okay, all of these alerts can be received, okay, over your mobile device. You don't have to have like a special, look, Android, iOS, okay, anything that can receive a text message or push notification. In theory, okay, you could just hang out on your computer if you wanted to. I also, people always ask me about, can I do any trade I want off my mobile device? Every trade that we do here in Ultima can be done off your mobile device or any tablet. So if you have like an Android tablet or an iOS, you don't have to have like a special like iPad. Okay. Me personally, I have the $299 Walmart iPad. It's probably about a year old. That's it. Like, you don't have to have anything special to be able to execute these trades. This is what the portfolio looks like. Okay. So this is, again, all opening and closing transactions. Okay. This is the 2022 Ultima portfolio returns and a $50,000 account. It's 56.6%. It's $28,314.75. We do weekly video updates. Okay. When I say weekly video updates, literally on a Friday morning, okay, I'll knock out a 12-minute video on everything. And it's really like as clean as I can possibly make it, okay, in terms of opening and closing positions. If you're curious what a text message looks like, okay, this is, well, fairly recent, okay. It's about a few weeks ago, but I wanted you to see kind of the full, Monty, if you will. This is part 1 and part 2. Part 1, that's a hedge. Part 2 is the premium sale. Okay, there's a hedge here, right? So this is the hedge. This is the premium sale. Part 1 and part 2. People, time out. That's as complex as it gets. Okay, we could explain to you how to do this. Okay, if you knew nothing about options, literally in a matter of about 3 hours. Okay, but you're not even going to have to worry about that. Brandon Chapman is going to take you through all the basics of it. You're getting a full-blown mentorship with this, right? It's $1,000 class. We're just including it. And I'm going to tell you exactly why we're doing it. We experimented with it a few months ago. Those clientele that went through Brandon Chapman's 6-week mentorship, okay, almost all of them, almost every single one of them have not only stayed on, okay, with TheoTRADE. Look, we don't want you to just be a member for 3 months, okay, $297. I want you to be with us forever, okay? Once you see what we offer for $297, jaws will drop, okay? We want you to sustain, we want profitability. And those clientele that went to that mentorship a few months ago, okay, phenomenal reviews back from them, phenomenal degrees of profitability. That's what's important to us. So these are the opening positions, okay? This is a closing position, closing for a 50% profit, okay? This is a closing position. Ironically, this is August 29th. Look, this is the opening position, okay? And you can see there's the 35.50 puts. Here's actually the 35.50 puts being closed on August 29th. That position was actually only on from August 17th to the 29th. Another one on the 29th, I went out and actually sold, okay, more premium. So look, literally the same day, 8:40 in the morning, bam, closed out of one for 50% profit. What did I do? Boom, kept the hedge on, kept the original hedge from the previous trade, okay, because it says keep hedge on from previous Ultimate trade. So I'm not even buying a new hedge. Bam, sell more premium. Okay, it's gold, Jerry, it's gold. What our members are saying. Kirk Knight, consistent, valuable education with remarkable, okay, return on investment, okay. TheoTRADE program is very inexpensive for what it provides and the results pay, okay, for the costs involved many times over. That's somebody that's had about 2.5 years, okay, of success with us. Paul M., the education is second to none. And if you're a novice when it comes to markets and trading, the training material is superb, professional, organized, and written in plain English. The professionals at TheoTRADE have all of the content, okay, that you could ever want, whatever level you want to take your trading, investing, education skill to. Been a member for 3 years and still growing and learning, really enjoying the experience. Okay, this comes from Jeffrey. I want to thank you for all the different staff point of views. This year, I did more of what works and less of what didn't. Okay, thanks to your selling premium and inflection point hedges, I took $12,000 to over $32,000 in 18 months. For doing your method, thanks again so much. And thank you for the new ideas in the coming year. Comes from Jeffrey. Get in the TheoTRADE now. We're going to work with you directly. There are 30 spots today available on the TheoTRADE riskless deal. Look, we also will give you unlimited email mentoring. During the course of your time here at TheoTRADE, at any point in time, if you have a trade-related question, email us. Email us. We have no problem in answering literally and definitively trade-related questions. The $297 riskless offer has never been available before. We'll give you the Ultima income generator alerts. We give you access to everything that TheoTRADE has done since inception in 2016. We're also giving you the full mentorship. It's a 6-week mentorship with Brandon Chapman. And again, there's still a no stipulations money back guarantee. The reason we do 30 riskless spots, there are 30 spots on the riskless deal over here, is specifically to generate what? Urgency for today. And I have no problem saying that whatsoever because it is a spectacular deal to get in here. Look, get ready for a text message. Text messages here in the US come from a 602 area code. It's actually an Arizona area code. Text messages in Canada come from a 647 area code. If you go to TheoTRADE.com/SKU, you can enroll immediately. I want to make sure that everybody gets every question answered over here today before we wrap things up, and we can even sit here for a few minutes and type some Q&A in there. But it is, again, includes everything that we discussed today. And I want to bring up one more aspect. So we actually give you access to the TheoTheta portfolios, right? Where you actually get text alerts. We're also going to give you access to upcoming classes. We have a class. Most education companies, they don't charge you $500 to go to a class. The class is included. Class is happening. It's happening September 19th. And that class will be recorded and archived immediately following the class. But I just wanted to make a quick point. It's part of it. And again, you still qualify for the money back guarantee. Execute upon this today. You get the money back guarantee. If at any point, even after watching the classes, it's not for you, like we get it. Again, the one thing I always like to stress to people is want to make sure that we get people that want to be here. And there's no, stress in terms of, cost over here. If you add to the cart, as I said earlier, make sure to put your phone number in, but the payments, you can pay $300, 2 payments of $149, 3 payments of $100. All right. TheoTRADE.com/SKU. This comes from Judd. I've been a subscriber for about 4 years. And this is the only organization that has actually taught me how to consistently make money in the markets. All right. What I have done here is just organized a couple of kind of routine questions, and I'm going to answer some specific questions. I'm also going to read off some names. Those are names that have individuals that have enrolled. It takes me about 7 minutes before I see your enrollment come through on my screen. So don't panic. I just want people to know we see your enrollment. Takes a few minutes for you to actually get an email access to the site. Well, you literally start going through TheoTRADE tonight. Listen to some of the archives. Like the archives, it's just second to none. When I say listen to the archives, the second you get into TheoTRADE, you go into member home. It drops you in member home. Just cruise over to archives. Go to classes archive, right? In the classes archive, if you really know what you're doing over there, you start listening to some of the classes and so forth. If you have no idea what you're doing, come to the Start Here menu. Now, answer a few questions and read off a few names. The first batch of names just came through. These are individuals that are enrolled. I'm just confirming that we see you. Keith S. from Texas. Brian K from Texas, Vincent J from Michigan, Donald M from Washington. And I'll see another batch cruise through here literally in the next couple of moments, because I can actually see, gotta refresh here in a second. See a bunch more popping in. A couple of things I want to answer in terms of just general questions, and then we'll get to some specifics. Number one, what do you really need to get started? Mobile device. You don't even need a laptop, okay? Any mobile device will actually work. We have everything you need to get started. If there is something you need in this business, we want to know about it, okay? Because that's what we do over here. Look, this is not a membership. We do not auto renew or auto bill. I've reiterated that a couple of times because it seems really important. It's important to me. It's not like a gym membership where you have to like give blood to get out, right? Number three, we provide weekly video updates for the TheoTheta portfolio. So for the TheoTheta large and TheoTheta small portfolio, we'll give you a video update. Those videos are never more than 12 minutes in length, okay? So it literally in 12 minutes updates you on every move that I've made in strategy, out of strategy, the hedges, what premium I've sold and what I was actually thinking while executing into there, okay? Number four, we'll give you TheoTRADE mobile, okay? We give you access to our mobile. And on the mobile, we do push notifications. By the way, on the mobile, it's not just push notifications. We also have archives of every class that we've done. So TheoTRADE mobile, you can literally like walk around, watch archives all day long on here. You can even download the archives and watch them while flying around. So you can have full downloadable archives. We actually built our mobile application in a similar fashion to like Netflix building their mobile application. All right, add your cell phone number when enrolling to receive text message alerts. Okay, it's just easier that way. 6, you can email us anytime. Look, email us anytime. Email us trade-related questions. Okay, I always throw this out here. Do not email us with like 5 minutes to go on an expiration Friday. Look, we trade, so give us 24 hours, we'll respond to you. But you can have trade-related questions. We're not afraid of trade-related questions. I don't like when firms like, they go, well, I can't give you specifics. Look, I've held every brokerage license pretty much imaginable. I've had a Series 3, which is a principal for futures. I've had a Series 4, which is specializes in options. I've had my Series 7, which is your regular broker dealer. I've had my Series 24, which is your principal broker dealer. I've had 768 people packed under my Series 24. I've also had a Series 66, which is my 63 and 65 combined. I have done Australian registration. I have done Canadian registration. You know what that means? Absolutely nothing other than I'm a damn good test taker. I was always good at taking tests, and they're like, let's ship Don out there. I even went through, for those of you that are in Singapore, okay, I actually met with the Singapore Monetary Authority. Those were the scariest meetings of my life, okay? They're very serious over there. Anyway, a few more names. Javier R. from Illinois, James H. from Georgia, Richard S. from Massachusetts, Keith H. from Texas. All right. So, by the way, I'm reading off a couple of names. Those are individuals I can see that have enrolled. Thank each and every one of you. And if you need anything, just shoot us an email, support@theotrade.com, there to do that. You know what? Chaz was actually saying, what's the best conditions for Ultima? The absolute most pivotal best conditions, okay? Wild volatility is just no question about it. But volatility is not necessarily related to VIX. So don't necessarily think like, oh, the VIX is at 13 or 14. It's not that good. Okay. It's movement, and two-sided movement is the best. So huge rallies, huge sell-offs, huge rallies. This environment, like what we went through this summer, kind of one-sided, a little bit more rough. Okay. We actually prefer two-sided trade and constant two-sided trade, which just means the ups, the downs over there. Okay. If it's markets are pinging back and forth, they have been now for like the last 3 weeks. It's been phenomenal. Like the last 3 weeks, we're knocking it dead. Anything that I've said negatively about this summer was wiped away in the last 3 weeks, because it's frustrating when markets are just, a little up, little up, little up. Okay. But it's good. It's good right now. It's really good. So Anyway, variations of all the trades we do could be done in an IRA or retirement account with as little as $2,000. Oh, this is a big one. Number 8, we can help you get approved for options trading at several major broker dealers. So we have marketing relationships with all the big broker dealers. You know, Charles Schwab and Tasty are the 2 biggest. They're the 2 biggest because they specialize in options. There's no question about it, no if and or but about it. Okay, we have relationships with many other brokerage firms, but those are the 2 primary ones that I think are they're going to be the most effective. Remember, there are 30 riskless spots available, so get results, take action, enroll for TheoTRADE now. There's no risk to you. You go to TheoTRADE.com/SKU. I'm going to pop that page back up there. Okay, make sure that I get everybody's questions answered on this particular front. By the way, the link to the thinkorswim indicator is right down here on TheoTRADE.com/SKU. It's toward the bottom of the page. For those of you that are enrolling, just click right here on add to cart. Again, it's $297 for 3 months. Get your money back anytime, literally anytime in the next 90 days. And it's one of the most important things. Make sure, okay, that you understand we want people that truly want to be here. With that, again, TheoTRADE.com/SKU. I'll answer a couple more questions by typing a few answers in here. I want to thank everybody for joining us this evening. Sorry, got a little crazy, held you guys a little longer than I expected to. I usually try to cap this at like 90 minutes. It's kind of nice with the marketplace closed. Get to focus a little bit. I want to thank each and every one of you for joining us. Please, I'll be live first thing tomorrow morning. Tomorrow is Wednesday. Again, we're in a holiday week of trade. Wednesday morning, I will kick off the morning, which means 6:20 a.m. Pacific time. That's 9:20 a.m. Chat room goes live. Okay, I will be live, first one on tomorrow morning for the first hour. We'll obviously be talking extensively about Ultima trades. Thanks everybody for joining us this evening. Have a wonderful evening. Bye-bye.